Hey, what's up, everybody? So today we just wanted to talk to you about the upcoming Bank of Canada rate announcement. Josh and I have been chatting. Does sound like there might be some changes. Josh, what can you tell me?
You know what? Here we are. September 8th is when we're recording this on Monday. 2 weeks ago, we recorded a video. And when we did that one, talking about the September 17th rate change, we are like 35-ish% chance is what the market was implying. And that's skyrocketed up to 85% chance. Almost a sure thing that we're going to see the Bank of Canada cut its interest rate here on September 17th by 0.25%. And the expectation is that there will be another one for sure by April, but more and more likely this year in December is when we're going to see that second one. Now, what's changed, right? We continue to get more economic data, more information to inform the Bank of Canada's decision when they sit down next week. The last piece of information they're going to receive is actually on Tuesday next week, the 16th. They're going to get the inflation data for August, and hopefully it plays along. And if it does, we're going to see a rate cut. Now, there are two big reasons why it's very likely right now, Jay. And the first one is a big thing, and I call it the big bad thing. And the other is what I would call the big good thing. The big bad thing is that the employment data came out for August, and it came out last week on Friday, September 5th. And we saw unemployment hit the highest level it has hit since August of 2021. Now, I don't know if you remember, Jay, and back in 2021, Alberta opened up with COVID, but the rest of the country didn't. We still had a lot of industries that were seriously hampered by the COVID restrictions, and unemployment was at its highest rate back then. But we're up to 7.1% unemployment, which is really, really high. And, I know we don't like to say, oh, it's worse in Ontario, but it is actually worse in Ontario. The three highest unemployment areas are Windsor, Ontario, Oshawa, Ontario, and Toronto at 11, 9, and 8.9% unemployment. It's been tough here in Alberta, and not going to minimize that at all. In fact, we don't really want unemployment to be the reason the Bank of Canada needs to cut its rates. It's only good for those of us who are working, those of you who are working, who are well qualified for a mortgage, and could benefit from the lower rates that come with it. But this isn't something that we're cheering about. When the data came out, the bond market, or the bond yields, they dropped significantly. They've come up a little bit with all the trade uncertainty. But since last Friday to today, we're down 0.15%, which is actually quite a bit. And since only a couple of weeks ago, we're down about 0.25%. So we're seeing downward pressure on fixed interest rates, which is also talking about expectations for the Bank of Canada. So that's the big bad reason. The good reason is that inflation seems to be cooperating. It's staying at 3 and under 3%. The total CPI inflation is actually under 2%. There's a number of different CPI measures ranging from 1.6 up to 3.1. And recently, with the tariff trade negotiations having started again, our federal government has dropped some of the counter tariffs on about half of the goods being imported into Canada. And that's helped to relaunch those trade negotiations. But when we're looking at this, what that also means is that it's not going to be the government causing inflation by adding tariffs to the things that we import here in Canada. And if we have the government causing inflation, but the Bank of Canada needs to help the economy by lowering interest rates, which also causes inflation, it's like a double whammy. And so we're likely going to see that it's not going to be as bad for that, which also gives the bank a bit more breathing room. So I know I talked a lot, but those are the big good reason is inflation's cooperating, and we're likely not going to see worse inflation from the tariff war. And of course, the bad reason being that unemployment's at its worst that it's been since the peak of COVID.
Gotcha. Yeah, so I guess we'll have to keep our eye on some of this data as it's coming out. Obviously, we're going to release a video on the next rate announcement, and that does explain why we're seeing so many more Ottawa and Ontario license plates driving around town now. So not good for them. But anyway, we'll just keep soldiering on. Thanks for joining us here today. Josh, thanks for that update. We look forward to catching you on the next one. As always, please like, please subscribe, even leave us a comment if you have something valuable to share. And for now, we'll see you next time.